Oh, it is the 16th of October, 2012. It is a Tuesday. Before looking at today's silver chart, let's take a look at silver from 2005 as of yesterday, but only from 8 a.m. to 12 p.m. or the 4-hour span Greenwich time. Now this is before most North Americans will get up, because this translates from like 4 a.m. to maybe 3 a.m. depending on the time difference. I've always known GMT mainly to be a 5-hour difference in time from Eastern time. Last few months it's been a 4-hour time difference, but obviously showing a major decline as it has lost 2/3 of its value only within those 4 hours. I've already talked about how from 4 p.m. Eastern time to 9:30 a.m. is generally good time for silver. And the interesting thing is this is 4 hours of those time frames, as I did some stats within the hours earlier. So from 8 o'clock, that hour itself loses 14%. At 9 o'clock, that hour is going to lose 5%. At 10 o'clock, it loses about 35%. And at 11 o'clock, it loses 42% since, of course, 2005. Now, the big hour is 2200 after. So what I'll do later on is compare, actually 2200 to 2400, the last 2 hours of the day, Greenwich time, compared to all other times. And we'll do that later on. So now to look at some of these details within this, of some of the dates and such. This top started on April the 21st, and this downtrend really ended here. But we've been in a free fall since April the 16th, 2008, within that time frame. Within the top, this is when we had this period here, and it's been going down straight within that time frame. Now, for all the other hours, that is, this is every time but those 4. You can see constant uptrend. If we get the details, this was a downtrend that started, this was the bottom in December, although the real bottom was in October of 2008. And then as the breakout continues, interestingly enough, that when the top comes in, that it's basically staying in an upward trend. But just wanted to point these out. And now let's go on to the actual silver charts. Let's start off within the daily chart. And on Monday, it was obviously a down session as it had lost 2.25% yesterday, as it had broken down below the support line. This double top formation, the neckline has been taken out. That pattern is in play. Therefore, what we'll do is we will take the length of this pattern and subtract it down below here. It pretty much matches up within the Fibonacci retracement of 31.52, which can be easily rounded to 31.5. And it really looks as if that we're now going to be testing that level, although it's difficult to say for sure. After we look at this here, well, what is this? Is this an area where it failed to find support and or finding resistance at 32.95? Or is this just a little pierce below that's going to break above? It's almost difficult within this chart, or any charts, to determine how this is going to play out. I think if it stays below 33.70 for more than 2 or 3 days, then I do think the chances of hitting 31.50 would be pretty good. But let's take a look at this 32.95 on the shorter term time frames. On the 1-minute chart from yesterday. Now this line here, it just happens to work with here and here, although it, ironically enough, picks 32.95. So within the 1-minute time frame, there was absolutely no support whatsoever. Now, as you see this moving down, this doesn't tell me, nope, it's not going to be support, it's failing through, because it's actually very common that when you find a bottom at a particular level, that you can have a fast move and then Next thing you know, it goes sideways and then goes back up like this. But obviously that didn't take place. So as far as my analysis would be, really down in this period here, this candle here, that would be the one where I'm saying, okay, I'm now liking the chances that we will be testing this 3150, although it is still kind of early, not only then, but today. Let's take a look at today's 10-minute chart. We got some interesting Fibonacci levels. We have 9% and 15.4. I'll explain them in a little bit. But the 15.4, couple cents off to 32.95. So this area of resistance here has been heavy resistance all day today. It has made these patterns right now of the higher lows where if it keeps on battling within the 33 level, then the odds would then favor of taking it out, and of course that daily chart I showed you would look like it's a pierce below the 33 level for that key support mark. Now the levels I got are 9% and 15.4. I want to show you how I come up with them. Fibonacci retracement is 61.8%, which is really the golden ratio, as some people would call it. And how you get this number is if you take any Fibonacci retracement number and divide it by its previous number, then you'll get 1.618. And vice versa, if you divide the number divided by the next number, you'll get 0.618. But anyway, with that being said, if I multiply 618 by itself, I'll get the 38.2%. I'm sure you've heard that many times within Fibonacci. Then I talk about the 23.6% retracement. And then after that is the, oh, I did it wrong, 14.5. Well, you know what? I can manually find out what that level is. So there's a small mental mistake on my part. And then below that, 9.0%. So let's find out what this true number should be. We have a high of 35.40, which is the high we had about really a month ago now, after the Fed decided, yep, QE's in play. We'll divide it by the low of 32.55. So now what we're going to want to do is that of a 14.5% retracement. So we'll put this x to the power of y, which is 0.145 instead of 15.4. Multiply the low again. This was yesterday's low of 32.55, which brings it up to 32.95, which just only makes sense, I guess. So there's the significant level that has been resistance on multiple occasions. And then we'll wait this week to see how this thing plays out, because I cannot tell just by simply looking at the daily chart yet if we're having resistance at 32.95 or if we are finding support there. It is too early to tell as of now. On any breaks really down below the support, it does really show as if 3150 would be coming into play as that area where support has a decent shot for being found. And that's, of course, really nothing more than a mathematical opinion, more than anything, to say the least. And thank you for tuning in to today's video, and have yourself a great day. Bye-bye.